Alright guys, welcome back to my screen. I want to believe by now you must have smashed the subscribe button, the bell notification, so you don't miss out on our subsequent video, but also help this channel grow to 100 subscribers. It's a new channel, so help it go to 100 subscribers. From there we can take it to 1,000. Yeah, and I promise you will not waste your time watching this video, right? I pride myself to be one of the most realistic forex trader here on YouTube. I analyze the market before the market play out, showing you guys the mindset, the thought process of a profitable forex trader. All right, so let's jump into this market. Let's see how we can break down this market using the top-down analysis. On today's episode, I was talking about various instruments: gold, BTC, S&P 500, US30, you name it. And also we end the video with the major currency pairs, so you get to understand the top-down analysis can be used across various instruments. All right, so let's start with the Japan 225. So pardon me, let me clean off my chart. So we have a naked chart in front of us. All right, so this is Japan 225. I'm going to draw my key levels. So if you're using the top-down analysis, the first thing you want to do is to go to the monthly time frame, not the daily time frame, not the 4 hours time frame, not the 1 hour time frame. Those time frame are used by intraday traders and scalpers to trade. Why not those time frame? If you're using those time frame, you have a blind spot to the market. Yeah, you have a blind spot to the market, especially if the market goes to a certain level. You will not be able to see those levels on those time frame. And hence the reason most of you place a trade not knowing the market has come to a major level and wants to reverse. You keep forcing the trade, it's not happening, and you keep blowing your account. So the top-down analysis, you start from the monthly time frame. You see the overall market, you see the flow of the river, right? So I'm going to start the analysis from the monthly time frame. So mark out my key levels. You can actually see we are in a bullish trend. The market is pushing all the way to the upside. You see this properly on the daily time frame, so you can see it properly on the daily time. The market is moving in a bullish momentum, and we've currently run into this level, which is around 73,000 basis points, and the market has had a pullback for a retest of this support area before actually pushing all the way to the upside. If you didn't watch last episode, we kind of call price to push back into this area before actually continuing with the major trend, which is bullish. How do we know that this market will collapse all the way down here? I told you guys earlier on, for every milestone achieved, especially if you're trading stocks, futures, even currency pairs, right? For every milestone achieved, investors will close position as profit, or dividends will be paid. Hence, the market would need to have a correction to the nearest support before actually pushing all the way to the upside to continue with the major trend. So if you look at previous price action, you will notice that for every time the market creates a new all-time high, pardon me, let me zoom out properly, we always have a correction. So we came into this level, the market started moving sideways, pushed down. When we came into this level, the market moved sideways, pushed down. Yeah, there was a correction here. Currently, we are pushing all the way to the downside. So you need to understand how market price action works. So this was the all-time high for the Japan 225. Investors needs to close position as profit. Dividend needs to be paid. Hence the collapse of this market. Now, at the time this market was collapsing, I'm going to be very transparent with you guys because I pride myself to be one of the most realistic forex trader. I didn't know Japan 225 was actually in existence, right? I didn't know Japan 225 was actually in existence because I'm the guy that loves trading major currency pairs. I flirt a little bit with indexes like S&P 500, US30. Then I look at some commodities like gold and oil. Then I'm done, right? But I had a friend who was trading Japan 225, and he brought it to my notice, like, what do you think is going to happen? I looked at the market. I told him at the time that Japan 225 was due for a retracement. That got my interest, right? Then I actually jump in on the trade. But don't worry, I'll show you guys how I jump in on the trade and what's going to happen next for the Japan 225. So once we came in here, it was a no-brainer. profit taking, a correction should occur. Now notice on the weekly time frame, notice this candles behavior on the weekly time frame. This just tells you that the bulls has lost its buying pressure. As you can see all this weak candle to the downside before the market actually collapsed. Normally you likely see a reversal sharp pattern like double top, head and shoulder pattern, telling you this market was due for a retracement. But at this time we didn't form any chart pattern that I know of. This is not a chart pattern. On the daily time frame, you can actually see all the sideways movement, but the ideology still remains the same, profit taking. So once at the time my price started moving sideways and we broke out from this area, right? This was the previous high and this was the current high, and this was the area price has struggled breaking down from. But has several days or weeks playing around this area. Once price breaks out from this area and tried to push above again but could not, came back down here, you see it properly on the 4 hours time frame. Okay, let's go to the 4 hours time. So this was it. So once I saw the zigzag movement, sideways movement, then we break down below here and price tries again to break above but could not, came back, break below here, did a retest of here. Now I've seen this kind of should I say pattern or price action behavior happen several times. I told my friend at the time this market is going to collapse all the way to the downside. This was a fake out to induce most traders. The market came down, tried again, could not, and was due for a retracement. So I told him wait for price to break out from the counter trend line. Never sell at resistance. Never sell at resistance. Why? So if you sell at resistance, you'll be prone to market manipulation. You'll be prone to market manipulation because you can sell here. And people who sold at the breakout, what happened? Stop loss became the case. If you sell at resistance, your likely market may come down a little bit, hit your stop loss before actually heading to your initial target. So I told them wait for a break of your counter trend line. And once price broke out from the counter trend line, his stop loss was somewhere around this area. I told him the market is going to collapse all the way to at least this area before actually pushing all the way back up. Now, as a trader, you need to know when to enter a trade. Well, you need to have an in-depth understanding of price action, market structure, price action, your entry, and where you're going to exit. Notice how I use all four together. I started by plotting out my key level, that was market structure, identifying the trend, and then I brought my experience in price action, knowing that for every all-time high achieved, investors close position as profits, else will have a correction to the downside. Two. Now, lastly, the third one is where to enter, so you're not prone to market manipulation, you're not prone to fake outs, and where to place your stop loss. So he entered somewhere around here, not risking less than 3% of his account. Right? But more so, he knows where to get out of the market. I told him once price comes in here, lock in your position. Although this came shy from the overall target, but trust me, he made a significant amount of money. So once he placed his trade, sold somewhere around here, notice the market started coming down, then push up again, because he has an in-depth understanding of where the market is heading to. He was not scared by this pullback. This is what the top-down analysis helps you do. Now, if you're a lower time frame trader, you probably would have gotten scared and closed your trade. So this is where I also jump in on the trade. So once I saw this fake out price coming, put a retest of this minor level, this is where I came in. So once I saw price come in for a retest of here, I waited for price to take out this level. So wait for a retest of that level. Once price broke out from this candle close of my counter trend line, immediately I jump in. And what happened? The market has been moving down all the way to the downside. All right. So let's continue. Let's see what's next for the Japan 225. If there are any trade opportunity. Now, the market came shy from this support. Yeah, this was the level we are anticipating price at least to push all the way back up. Just to come into at least start pushing all the way back up. Trust me, I saw somewhere around here, and once price came in here, I was in a trade stop. And what happened? My stop loss have been smashed. I'm not going to come here and live, obviously, for break even, right? This was my overall target. My overall target was somewhere around there. I told you guys if price breaks out around this area, our next target will be this trend line. Pardon me, let me get my trend line properly. If we break out from here, we might actually speed a little bit to touch this trend line before start pushing all the way to the upside. But we came shy from this level. With this market come all the way to the downside, I want to believe this market still have an assignment to complete, at least to do a touch of this area or this trend line before start pushing all the way to the upside. Although my stop loss has been smashed for break even. Break even means I've taken out something from the market. I've adjusted my stop loss above where I sold from in anticipation price will get to my overall target, but that didn't happen. So this is where I sold. I sold somewhere around there, so I was in profit all the way down here. One price closed below this area, I closed out my first trade. I pushed my stop loss a little bit above this supply area in anticipation that my second trade will get to my overall target. But what happened? Price has pushed up to smash my second position for break even. So on the first trade I've made money. On the second trade I've also made a little bit of money. Anticipation price will get to my overall target, but it didn't happen this time. And what happened? Pretty much had this movement all the way up here. So what's next for this guy? I see price coming into the supply area. This is supply. So if you're a supply and demand trader, price came into the supply area. So if you miss out on this trade, not to beat yourself, wait for price to. If you have a break of this trend line, you might actually speed all the way to the downside. But I'll not be interested in clicking the sell because if you wait for a break of this area, your stop loss has to come above here. Then the pip count from year to year is not that juicy. All right, so JP225 just allow the market to do its thing. When the market is ready, it will tell us that we start buying all the way to the upside. I still feel this market might actually collapse to the downside, but the pip count for me is not that. Pip count for me is not attractive. It's not attractive. So what's next for the JP225? Maybe the market might come in here for a touch or here before actually pushing all the way to the upside. If that happens, don't worry guys, I'll be coming here to update you guys on what's going to happen. If we are ready, market is ready to start buying, I'm obviously going to come out here and tell us, look, JP225 is ready, we can start buying all the way to the upside. If I bring out my Fibonacci from swing low to swing high, you will realize we are currently at the 50% Fibonacci level. This is the market came rightly into the 50% Fibonacci level. So the Fibonacci level is a technical tool. Fibonacci's are technical tool that mark out potential areas of price reversal. It can reverse, this technical level can reverse a pullback to continue with a major trend. It's also possible. So what this means is that it's possible that this market can start pushing all the way to the upside. It's possible. Because while we came into the 50% Fibonacci, you have to understand that the 50% Fibonacci and the 61.8 Fibonacci level are the most potent reversal level. They can reverse a pullback to continue with a major trend. Hence the reason I told you to sit on your hands for JP225 to see how the market wants to react. When the market is ready to start pushing all the way to the upside, I will come here and update you guys about what's going on JP225. It looks like the correction might actually be over. So let's see how it goes. Let's just see how it goes, guys. Let's just see how it goes. But if price push all the way back here for your retest and start collapsing all the way to the downside, okay, let's see what happens. In this scenario, we have price push for a touch of this trend line, see a 4-hour bearish engulfing candle, or you can start selling. Especially when price breaks out from here, but I won't be interested because the pip count is small for me. The pip count is not attractive to me. So I'm going to sit on my hands on the JP225. Now let's look at gold, guys. Let's look at gold. I'm going to clean all of my charts so we understand what I'm talking about for gold. If up to now you've not smashed the subscribe button, please do smash the subscribe button so you don't miss out on our subsequent videos. So this is gold. You can actually see gold has done tremendously well as a result of all the civic unrest going on in the world. You have to understand gold is a safe haven currency. Whenever there is a civic unrest, Whenever there's crisis in the world, investors tend to flock into gold as a safe haven currency. Hence, the reason the market has been pushing all the way to the upside. But from experience, I can tell you every massive move comes a consolidation. So I won't be surprised if gold goes into a consolidation, while every massive move comes a period of consolidation. The market won't just trend like this for several years. I mean, at one point it has to rest. It has to come into a period where it needs to rest, and that's where most traders start losing their funds, because most people who made money from all this gold move will probably lose the money once the market go into a range, because the average trader makes money when the market is trending and tends to lose the money when the market goes into a range. I feel gold might actually play around this level and this level for several years before actually doing any other thing else. So far, there is no issue for there's no serious issue. Gold might actually play around this level for several years. All right, so mark our key levels on the weekly. You can see this level properly. Okay, let me adjust this to accommodate price action. So I have another level right here. You can see price tap here, tap here, tap here. Cool. All right, cool. All right, so gold, I see a breakout, a retest. We're currently trading at this level. We have a minor level sitting somewhere around there, just a minor level, nothing too serious, minor level. So if you're a gold guy at this point, you want to sit on your hands on gold. Gold is not looking attractive at this point. You want to sit on your hands on gold. Gold has been failing to take this high and this low. These are several consolidation going around for gold. If I bring out my trend line from swing low, not that this trend line would make anything important, but you can actually see gold has been playing around this level. If gold break above this trend line, I won't be interested in buying until I see gold break up. So if gold breaks above here, we can start buying all the way down here. But far gold is trading between this high and this low. I'm not interested in anything for gold. So if you're a good guy, please sit on your hands. There are no trade opportunity for gold as of now. The market is consolidating. Please, gold traders, sit on your hands. The market is in a consolidation. All right, you want to sit on your hands. So let's leave gold. Let's look at BTC. Let's look at BTC. Okay, BTC is in a state of I don't know if I want to go up. I don't know if I want to go down. All right, so I'm going to clean all my drawings. So we have a naked chart for BTC. Let's go. You can actually see BTC is in a downtrend. Key levels drawn. Okay. Accommodate these other touches. So I can accommodate for these ones and these several touches. Okay. All right. Cool. All right, so BTC, you can see the trend is bearish. So this is a high, a low, a lower high, a lower low, a lower high. But the market has failed to create a new lower low. Let me zoom in properly. This is known as double bottom. So the market has formed a double bottom on a major level of support. This is the first bottom. This is the second bottom. Principle of price action states in a downtrend, price should be creating lower lows and lower highs. But the market has failed to create in a new lower. This low is equal to this one, and last month candle was a bullish bounce from this area. So technically this is a double bottom. Double bottom are bullish reversal chart pattern. They can reverse a trend from being bearish to being bullish. So, and also if I draw my trend line from the bottom, you will realize that this trend line has been the catalyst, that bad boy. If you're a BTC guy, you will realize this trend line will be your friend. Okay, but for me, who doesn't really care, it has been that bad boy that has denied us a trade opportunity to the downside. We've come in for a touch, third touch of this trend line. You see that properly on the weekly time frame. So this is the first touch, this is the second touch, and this is the third touch of a trend line. So not only do we have a double bottom telling us this bearish trend will reverse from being bearish to now being bullish. We also had price coming in for a third touch of a major trend line. So we have confluence here, right? We have confluence here. So double bottom occurred on the major area of support, which is also in confluence with this trend line, telling us, look, a push to the upside will be very much likely to happen. Now, notice price action. Notice the behavior of previous price action. Whenever BTC wants to make a major pump or dump, it will always come into an area, coil around that area for a bid, play around that area for a bid before actually making its move. Either a pump or a dump. This is how we came into this area, coil around this area, romance this area, romance this, pushing all the way to the upside. And this is how price came into this area for several weeks. This is the weekly time frame. So each individual candles represent 1 week. For several months, the market was playing around there before actually making a dump to the downside. Same thing is going on around this area. The market is taking its sweet time to play around this area, playing around this area. Like, does it strike at something in your mind? Like, guys, I've been trading this market for several years. I've been trading the Forex market for over 10 years. So when I see a pattern, like, I know this guy. All right, so basically it's taking its time to coil around this area, around $63,000 per coin. I feel this market is due for a push all the way to the upside. And if I zoom in properly on the second leg of the double bottom, you will realize we also form another reversal sharp pattern known as the head and shoulder, inverse head and shoulder pattern. This is a left shoulder, this is a head, these are right shoulders. You see it properly on the daily time frame. Okay, cool. Left shoulder, head, right shoulder. Left shoulder, head, right shoulder. Mind you, on the monthly and weekly, we form a double bottom, telling us the bearish trend is over. We should expect a bullish trend to the upside. On the second leg of the double bottom, the market has also given us a bullish continuation sharp pattern known as the inverse head and shoulder pattern. Left shoulder, head, right shoulder. Inverse head and shoulder pattern are bullish continuation sharp pattern or bullish reversal sharp pattern. They have the probability, not a must. Every sharp pattern, regardless of the time frame they occur, they can be invalidated. But the higher the time frame, the higher the probability of that sharp pattern playing out. So we form what they call an inverse head and shoulder pattern, telling us it is possible BTC wants to have a push all the way to the upside. It is giving us a bullish signal all the way to the upside. So this is the neckline of the inverse head and shoulder pattern. This is the left shoulder, this is the head, this is the right shoulder. This area marked with the gray bar is the neckline of the head and shoulder pattern. So what will be our criteria? Are we buying? Are we selling? We are buying. Why? The monthly time frame, the higher time frame has told us we should expect a push to the upside. So at this point, if you're looking for a selling position to the downside, you might as well want to be careful. Market has told us expect a push all the way to the upside. Left shoulder, head, right shoulder. This is the neckline. So what would be the our criteria for entry? Wait for price to break above. Guys, don't rush. Wait for price to break above. Don't buy at the breakout. Never buy at the breakout. If you do so, you're prone to market manipulation. Wait for price to break above. Wait for a pullback into the neckline or the shoulder line of the inverse head and shoulder pattern. Wait for a bullish candlestick bounce, i.e. bullish engulfing, shooting man, you name it. Wait for a bounce off of this area. Again, don't buy at support, neither sell at resistance. On this case, don't buy at support. If you do so, the market might actually spill a little bit to the downside, hit the stop loss before actually pushing all the way to initial targets. And most of you can relate. So wait for price to bounce from this area. Then we'll go to the 4 hours time frame. Not the 5 minutes, not the 1 minute, not the 30 minutes, the 4 hours time frame to draw our counter trend line. So something like this. We draw our counter trend line at the waves right? And wait for a 4 hours bullish engulfing candle break of our counter trend line. Why are we doing this? So we are not prone to premature entry. So wait for price to break above, pull back here, go to the 4 hours time frame, draw your counter trend line. One price breaks from your counter trend, you can start buying all the way to the upside. So we have all this space to work with. We have all this space to work. This is a 300 to 200 pips move all the way to the upside. So once we start pushing all the way up here, the next target for BTC will be $82,000 per coin. This is the nearest support for BTC. If we break out from this level, the next target for BTC will come somewhere around $97,000 per coin. If we break out from this level, we are going all the way down here, which is around $123,000 per coin. So we have all this space to work with. One price comes in here, I will first of all close out my position entirely as profit. If we break above here, I will enter the market again. So price keeps just pushing all the way up until it gets to my initial target, which is somewhere around here. You have to understand the market moves from level to level. Notice how it was coming down. It left this station, came back, kissed here, push up a little bit, broke it, retested it, came down. On its way going back, we'll kiss here, push up, break above, retest here, push up, break above, retest here, push up. The market will always visit its key level. All right, so that's if you are buying. We need price to break above here, wait for a retest, wait for a bounce, a break of our country level. We can start selling all the way to the upside. Now, before you start getting excited, there's an evil spirit. Guys, whenever I do my analysis, I always look out for potential areas that can cause an upset as to why the market shouldn't get to my overall targets. And one of those areas is this guy. This trend line is here, guys. This guy is here. This guy, you can't ignore this guy. If you do, you might have your hands on your head. This guy is here. This is the first touch. This is the second touch. Price is possible we can break above here, come here, hit this trend line, start reversing all the way to the downside. It's possible. This is why you have to do your top-down analysis. It helps you see everything. You have no blind spots. This guy is here. I'm not going to ignore this guy. This is an evil spirit. All right. So what are we doing now? In my journal, I've written in the scenario we break above here and start pushing all the way to the upside. Once price comes into this level, lock in, not close out entirely, lock in significant amount of your profits in anticipation that if we break above here, all things being equal and good, we will come here. But if we come around this area and price starts playing around here in a very funny way, and I see a bearish engulfing candle, especially a daily or a 4 hours bearish engulfing candle, I'm going to close out my trade. This way, I don't give back what I've made from year to year. I don't give it back to the market. I've taken something from the market. Look at it again. If we break above here, we push down up here. Right? If we break above here and we're coming up here, I'm going to lock in significant of my profit, not close out my trade. I'm going to push my stop loss a little bit from the market. Anticipation that if we break out from here, we are coming here. If we break out above here, we are coming here. In fact, I'm going to close out my first trade entirely as profit. On my second position, I'm going to push my stop loss above where I bought from. And especially if price breaks above here, we are coming here. Now, if you're trading maybe, let's say you're trading on $100 account, use 0.01, 0.01. All right. Once price comes in here, close out your first 0.01 entirely as profit. Then on your second position, push your stop loss above where you bought from. So your second position has already secured profit. You have not closed the profit, but you've already secured profit in anticipation that, look, if the market wants to act funny, you don't give up what you've made to the market, or you don't put your trade at risk. But any scenario price breaks above here, okay, cool. You then make all the profit from here up here. These are the things that are put in place that help me stay in the confinement of profit. Yeah, guys, help me stay in the confinement. But this is how I sleep well at night. I don't come out every day constantly scanning for trade, constantly looking at the market, babysitting my market. No, once I place my trade, I always look out for every evil spirit that wants to cause problem, and I act in accordance to what I just told you guys right now. A difference between trade management and risk management. A very big difference, guys. Most of you know about risk management. You risk 3% on every trade, but most of you don't know about trade management. Trade management is when the trade is playing out. How then you manage the trade so you don't give back what you've made to the market. All right, so that is it for BTC. But any scenario price comes around this area, you see a bearish candlestick bounce and we start pointing all the way to the downside. It means the whole head and shoulder pattern has been validated. The market might actually want to collapse a little bit to the downside. The only time I'll be interested in going short, and the only time I'll be interested in selling BTC is if price breaks below this area. If I see a proper break below this area, then I'll be interested in going short on BTC. Until that happens, I have no interest with selling. How BTC is concerned, I have no interest in selling BTC. Yeah. So if I'm selling BTC, my next target has to be, pardon me, I have to come somewhere around this level. If BTC wants to sell, the next target for BTC will be around $48,000 per coin. How do I just look at this area? We had a touch here, reverse all the way to the downside, pull all the way to the upside, bounce here, start pushing all the way to the upside. So if price is coming back here, it has to visit this level. So if BTC breaks below here, the next target for BTC will have to be $48,000 per coin. And that will be the only time I will be interested in going short on BTC. Whatever is happening here, I have no interest. I'm not interested in clicking buy or sell within this high and this low. The market needs to buy before I will consider taking a buy position, break above here. If I consider taking a sell position, market needs to also break below here. So until that happens, I have no billings with BTC. Let's look at the S&P 500. The S&P 500 as of last week, we were anticipating a reversal to the downside. Why so? The market came into an all-time high, and we anticipated profit taking. The market should reverse to correct itself before actually pushing all the way to the upside, at least into this level before actually pushing all the way back up. But what happened? We pretty much formed a double top. Let me zoom in properly so you can see this was a pretty much double top. This was the first top, this was the second top. Pardon me. This was the first top, this was the second top, and this was the neckline. I told you guys, wait for price to break below the neckline. But what happened? We came into the neckline and we bounced. This was a bullish candlestick bounce from the neckline. Just like I told you guys earlier on, sharp patterns, regardless of the time frame they occur, they can be invalidated. And what happened? This double top has been invalidated. As of last week, guys, really missed out on this. I'm not gonna lie. It was a very simple trade. Once price came into the neckline and rejected, it just doesn't. Once price came into the neckline and rejected, it just tells you a push to the upside would occur, especially if price have taken out from this trend line. A break of this trend line would have been a simple buy for me. Breakout, a retest. Let me zoom properly to see this. This was a simple breakout, a retest, and this beautiful move to the upside just occurred. I missed out on this trade. Hence the reason I didn't upload any video 2 weeks ago. That video we dropped was 2 weeks ago. I did record an episode to drop last week Monday. I was so tired, so exhausted, I couldn't upload it. I was so tired, guys, and I wasn't really like, I needed to rest. I've been working so hard, I needed to rest. And the reason I wasn't proactive in the market, I missed out on this trade, obviously. And what happened, the market has pushed all the way to the upside. But not to beat ourselves, what's next for the S&P 500? If I see a proper breakout here, wait for a pullback into this level, wait for a bounce, wait for price to take out your counter trend line. You can start buying all the way to the upside. Wait for a breakout, a retest, you can start buying all the way to the upside. Until that happens, S&P 500, as of now, it is too early to start jumping in for a buy. It's too early to start coming in because you can buy it, the market can start pulling all the way to the downside and hit the stop loss. So sit on your hands for the S&P 500. Let's look at the major currency pairs, the euros, and I will call it a day on today's episode. Guys, today's my birthday. Please do smash the subscribe button, the bell notification, so you don't miss out on our subsequent video. All right, the dollar index, we're anticipating a reversal to the upside. Now let me take my time. Let me breathe in, guys. All right, let's break this down. You have to understand that the dollar index is the average price of all the major currency pair put together. The dollar index is Euro USD chart turned upside down. If the dollar index is trending, every other major currency pair will be trending. If the dollar index is bullish, every other major currency pair will be bearish. If the dollar index is in a range, every other major currency pair will also be in a range, or will also be, will be having difficulty, or will be moving very sluggish. Hence the reason most of you this year has blown several accounts. Why so? Because the dollar index has been in a range. I've been trading between this high and this low. And the reason your feed the profit challenge is blowing your account, because your trading market condition that was not favorable to any kind of trader, especially if you're an inexperienced trader. You've blown your account. All right, we're not here to dwell on people's losses. For the first time in a year, we broke out of the range. When a simple break out of a range, a retest of the range. Okay, let me take that back. We broke out of the range. We pulled back for a retest. When a simple breakout retest, immediately I drew my counter trend line, and I told you guys, wait for a 4 hours break of your counter trend line and you can start buying. And what happened? We bought here. Now if you're buying the dollar index at the time, it means Euro USD will be selling, because the dollar index is Euro USD chart turned upside down. Both charts are inversely the same thing. So once we broke out of here, it was simple. This trade was spot on. Everything was spot on. We should be pushing all the way to the upside. With a simple breakout, retest, a break of a counter trend line, a correction to the upside should have occurred. On the 4 hours time frame, it was very simple. Once price broke above here, we jumped in. What happened? Price started pushing all the way to the upside. Came back, pushed up, started playing around this area. So I bought somewhere around here, right? Started playing around this area, played, came back down, pushed again. I was so upset, guys. I just got so tired, and I looked at the market for what this market was too low, and I noticed we formed what they call a double top. This was the first top, this was the second top. Double top are bearish reversal chart pattern. Once I noticed this double top, immediately I closed out my trade on my Euro USD chart, because I knew for a fact this market wants to give us all the way to the downside. Double top are bearish reversal sharp, and they can't reverse a trend from being bullish to being bearish. So when this, everything was spot on, guys. This market had no reason as to why we shouldn't push all the way to the upside. But what happened? A double top occurred. Immediately we had this collapse all the way to the down. And this is, you have to be, guys, you have to be very watchful in this Forex market, so you don't incur unnecessary losses. Once I saw this double top, immediately I closed out my position on Euro USD chart. And what happened? The market collapsed all the way to the downside. We are currently doing a retest of this demand area. Obviously there was a demand area right here. We are currently doing a test of this demand area. So what's next for Euro USD chart? You can see my trend line has been drawn. This is the third touch of the trend line. I won't be surprised if we start pushing all the way to the upside again. But to be on the more safer side, if market start pushing all the way to the upside, the only time I will be interested in going long for euro dollar index will be priced coming back to break above here. This was the area we had difficulty breaking above. We tried, we failed, we tried again, we failed, and we are currently back at this demand area. Now, all you demand and supply traders, you want to be careful. It's possible market can push here, do a retest of here, and start collapsing all the way to the downside. It's possible we can break here and start bleeding all the way to the downside. It's also possible we can bounce here and start pushing all the way to the upside. This market is in a state of 50-50 right now. If we break down here, I'll be selling. That will be Euro USD will be buying. But the only time I'll be interested in going long on the dollar index is price coming back here, breaking above here. If I see a break above here, then I'll be interested in buying. But for now, dollar index, I have no bias. I have no bias yet. I feel the market may actually want to. Just feel the market may actually want to collapse all the way to the downside. So scenario will be a breakout of this level. So a breakout of the level. Mind you, we don't start the breakout. Wait for price to break out. If we pull back here, wait for a bounce. Draw your counter channel at the 4 hours time frame. You can start selling all the way down. If price break out here, retest here, we are coming down here. All right. The only time I will be interested in going long will be price coming back here, breaking above here. So I see a breakout above here, a retest of here. I'll be interested in going long. Until that happens, dollar index, I'll be sitting on my hands. I have no bias on the dollar index. Any strategy that does not involve patience will end up blowing, and it will blow your account. Okay, you need to be patient, allow the market to cook. When the market is ready, it will tell you, and you can jump in and make money. All right, there's no point in rushing the market. It's not worrying. So let's look at the Euro USD chart. The Euro USD chart, we are in this consolidation. Everything was spot on. It was the left shoulder here, the right shoulder, a fake out, guys. It was a fake out. So we jumped in at the breakout, saw this fake out. So it was simple. So once I saw price broke out of the range, we pulled back, did a retest of it at this break of a counter channel line. I saw what happened. Price started misbehaving around this area. Once I saw the double top on the Euro USD, I had to close my chart. What happened? We pushed all the way back up. This is how I escaped stop loss. All right. So what's next for the Euro USD chart? This market has pulled in for a touch of this supply area. This is the supply area currently trading around the supply area. It's possible we can start pointing all the way to the downside. And as you can see, my trend line has been drawn. This is the first touch, this second touch, this is the third touch of the trend line. And if I bring out my Fibonacci from swing high to swing low, you realize, okay, the market came shy from the 50% Fibonacci line. I'm be surprised if we push maybe a little bit to the upside, but in truth, I'm not interested in going long for Euro USD. I'm not interested in going long. The only time I'm interested in buying for Euro USD, price has to come and break above here. If price breaks above here, if I see a proper break above here, I will be buying. Because you can still collapse all the way to the downside. It's possible, but I can tell you for a fact this head and shoulder pattern has been validated, guys. It has been validated. Until price comes back here, then we can see the head and shoulder pattern has now been activated again. Until that happens, Euro USD chart, I'm sitting on my hands. I have no business in looking for buying and selling within this high and this low. The market is currently consolidating. Break down here, I will sell. Break above here, I will buy. Until that happens, Euro USD sits on your hands. Let's look at the pound sterling. Same thing goes with the pound sterling. The pound sterling is in the state of I don't know if I want to go up, if I want to come down. We've had a failed head and shoulder pattern that was meant to reverse this immediate trend to continue with the major trend, which is bearish. We came to the neckline and negotiated. This was the left shoulder, this was the head, this was the right shoulder, and this was the neckline. I told you guys this trend line will put up a fight, and what happened? We've bounced on this trend line. We are currently pushing all the way to the upside. The only time I will be interested in going short, so is if price comes back and break below here, I'll be interested in going short. If price comes and break above here, I'll be interested in buying. Whatever is happening here, I have no interest, right? Because you can buy. Why so? That will be a very important question. Why am I not looking for buying and selling inside of this range? You have to understand that once the market go into a range, because we have equal buyers and sellers, the trading probability becomes 50-50. And as traders, we don't trade 50-50 trade opportunity. If you are trading 50-50 trade opportunity, you're prone to market manipulations. It's like you're gambling. We want to trade probability 70-30 in our favor, 80-20 in our favor, 90-10 in our favor, at least the minimum 60-40 in our favor, not 50-50. 50-50 is today you make money, tomorrow you make losses, tomorrow you make money, tomorrow you make losses. After, if you look at those honest intraday traders, you realize sometimes they have 1 week losing streak. Sometimes they have 1 month losing streak because they are trading market conditions that is not favorable to traders. So I will sit on my hands, allow the market to decide. If the market is ready, it will break above here. I'm not saying if I go to the lower time frame, I won't find trade opportunity, but how consistent are they? Like if I go to the 4 hours time frame, I'm seeing what they call an inverse head and shoulder pattern occur. This is the left shoulder, this is the head, this is the right shoulder, this is a neckline. If price breaks above here, pull back into this level, bounce, the market can push all the way up here. It's possible. If not break above here, but the market will come here at least here first. It is possible. How am I seeing an inverse head and shoulder pattern? Let me go to the daily so you get to see this properly. This level is the major level. This level right here. Notice how price has struggled around this level before. Price rejected around this level, break above it, we tested it, push up, kissed it, pushed up, came down. There's been several interplay with this level, struggles with this level. Now on the left shoulder of the head and shoulder pattern, this is the left shoulder, this is the head, this is the right shoulder, right? Price has come to that level and form an inverse head and shoulder pattern. Left shoulder, head, right shoulder. This is the neckline. Left shoulder, head, right shoulder. This is the neckline. If we break above here, obviously, pull back here, we might come here. That's the truth, guys. That's the truth, guys. But I'm not interested in clicking the pip count. The pip count is small. We can break above here, pull back here. You can start buying, price can reach here, fall back down again. All right, so better still, I'm going to sit on my hands and allow the market to decide what it wants to do. All right, let's look at ADSD one more time, then we wrap it up with ADSD. ADSD looks like it want to have a push all the way to the upside, but in my books, ADSD is relatively still a risky trade. Why so? I will start talking about all of that. You need to understand ADSD has breached its major bearish trend line. It has broken above its major bearish trend line. Not only has it broken above a pullback, also broken above a major level. We've pulled back for a retest of that level, and it looks like the market wants to push all the way to the upside. Let me take all of this off so you understand what I'm talking about. Provide myself a cleaner shot. So this is a break above a level, a pullback. Last month candle was bullish. This month kind of looks like it wants to take off from this area. But also, if you're looking at this properly, this is looking like a left shoulder, this is looking like a head. Maybe the market might play around a little bit to complement, to form a right shoulder to complement the head and shoulder pattern before actually collapsing all the way to the downside. It's possible. All the dollar-based pair are giving head and shoulder pattern, right? So I think against the left shoulder, head, maybe the market might just play around a little bit to form a right shoulder before actually bleeding all the way to the downside. If you look at it properly from the weekly, you see the left shoulder, you might see the head. The market might play around a little form a right shoulder before actually bleeding all the way to the downside. It's also possible the market can also start pushing all the way to the upside, break above here. If we break above here, I'll be interested in going long for ADSD. Why? So this was the first breakout. We rejected around here. We came back. We tested this area, pushed up again, failed, pull back down again. Right? It's also possible we can come here, reject, pull back down. But if market comes and break above here, then we'll be buying. In scenario the market comes and break above this area, I'll be selling for ADSD. Until that happens, I don't have any business in trading ADSD. All right, guys. So sorry we couldn't find any trade opportunity for this week, but I hope you enjoyed this episode, and I hope you learned a lot from today's episode. Catch you guys in my subsequent video. Peace and love. Please do smash the subscribe button, please, so the channel can grow. Okay, I'll catch you guys in my subsequent video. Peace and love.